Hello and welcome back to Global Value. In today's video, we are performing a fundamental stock analysis of Costco Wholesale Corporation, ticker symbol COST, COST. When it comes to American business, there's nothing quite like Costco. At least that's the opinion of Charlie Munger, Warren Buffett's right-hand man and investment partner of over 60 years. Even though Berkshire Hathaway has sold out of its Costco position over the past 2 years, Charlie Munger is still a Costco board member, and he's been on their board since the late 90s. In his eyes, Costco is one of the premier businesses in the entire world, and it really operates in a very integrated win-win-win manner. Costco is also a business that has been highly requested by subscribers. Costco is currently trading for $501.38 per share. Over the past year, Costco's stock price is up 4.5%. Over 5 years, Costco is compounding at a rate of 25% annually. Over 10 years, they're compounding at a rate of 17% annually. And going back prior to the global financial crisis, over approximately the past 18 years, Costco has compounded at a rate of 14% annually. Costco also pays out a slight dividend yield in addition to this. It's currently under 1%, but Costco has also periodically paid out special dividends. So Costco is situated right in the middle of its 52-week high and its 52-week low. They are a large business. They have a $226 billion market cap. For more background about Costco, the leading warehouse club, Costco, has 838 stores worldwide as of the end of fiscal 2022, with most of its sales derived in the United States, which comprise 73% of sales, and Canada, which comprise 14% of sales. It sells memberships that allow customers to shop in its warehouses, which feature low prices on a limited product assortment. Costco mainly caters to individual shoppers, but nearly 20% of paid members carry business memberships. Food and sundries accounted for nearly 39% of fiscal 2022 sales, with non-food merchandise making up 27%, warehouse, ancillary, and other businesses such as fuel and pharmacy comprising 21% of revenues, and fresh food comprising 13%. Costco's warehouses average around 146,000 square feet. Over 75% of its locations offer fuel, and about 7% of Costco's global sales come from e-commerce, which excludes their same-day grocery and various other services. Costco is also operating a number of pilot stores internationally. Costco Wholesale Corporation was founded in 1976, the bicentennial of the United States, and is based in Issaquah, Washington. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Costco based off of their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public. It will continue to evolve and improve over time. And so with that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. So there are 2 reasons for this. The first is that the average publicly listed business earns about a 7% return on capital. And the second is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. Costco has produced high above average returns on capital in all 5 of these years. Over their last 12 months, they produced 24% returns on capital, and averaged out over this time frame, they're producing 22% returns on capital, nearly 3 times better than that of an average business, and 1.5 times better than that of the metric we were looking for. This is a strong check to start off on metric number 1. Metric number 2, here we're taking a high-level overview of the cash coming into the business. We want their revenues, earnings, and free cash flows to have grown over the last 5 years. So this metric is all or nothing in nature. Either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. So over this time, Costco has seen very strong revenue growth. Their earnings have also almost doubled, and their free cash flows are up at a decent rate as well. Costco was a very resilient business during the COVID-19 pandemic, as it was an essential business for people to get in bulk supplies. And so their business resiliency is really showcased here in their growth numbers. A really interesting fact about Costco is that they primarily only make money off of the memberships that they sell. Almost all of the merchandise in their warehouses is marked down so that they're pretty much operating at cost, and that at the end of the day, this really means that Costco is viewing itself as an aggregated buyer for its members. And so with this strong growth and their very interesting business model, this is another check here on metric number 2. Next up for metric number 3, we're looking for earnings per share growth over the last 5 years. So here we're taking the perspective of an individual shareholder in the business by looking at their business on a per share basis. Costco has nearly doubled their earnings per share over this time. They've nearly doubled their earnings as well, and they've only issued about 1% additional shares throughout those last 5 years. So with their shares outstanding pretty much flat, their earnings per share are reliant on their earnings growth. and they've had plenty of that. On a per share basis, Costco is growing their profits, and so this is another check on metric number 3. Metric number 4 is going to be very similar. Here we're looking for free cash flow per share growth over the last 5 years. So again, Costco's pretty much kept their shares outstanding flat over this time, and they've managed to grow their free cash flows. So their cash flows are up on a per share basis as well. This is another check on metric number 4. So far, we are perfect through our first 4 metrics, 4 checks and no X's. Next up, for metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that Costco has produced over the past 5 years. So this is helping us evaluate how the company is utilizing leverage. Currently, Costco has negative net debt, which means that after subtracting all of their debt, they're left over with $150 million in cash. And over this time, Costco has produced $21 billion of free cash flow. Not only do they have a cash position on their balance sheet, they're also highly cash flow generative as they've grown their cash flows over this time. This is another check on metric number 5. The business has a very conservative balance sheet that would seemingly be very strong for a retailer here. We are still perfect through our first 5 metrics. Our 6th and final metric, the big metric of them all, we want their average free cash flows to their total enterprise value to give us a yield that's above 5%. If this is the case, this will give us a slight risk premium to the rate of the 10-year treasury and give us another reason to potentially be interested in Costco. So we're using their total enterprise value here rather than their market cap because their enterprise value is going to take into account both their market cap and their net debt position and give us a more accurate picture of the economic reality of Costco as a business, more similar to as if Costco were a private company. So currently, Costco has a $226 billion total enterprise value, and over the past 5 years, we learned that they produced $21 billion in free cash flow, meaning that in an average year, Costco produces $4.2 billion of free cash flow. So when we divide their $4.2 billion of their average free cash flows by their $226 billion total enterprise value, that gives us an average free cash flow to enterprise value yield of approximately 1.9%. So that's about half of the rate of the 10-year treasury right now, and that is below that 5% mark we're looking for. So unfortunately, on an average basis, Costco's not quite up to snuff here, and this is going to be our first and only X on metric number 6. Also worth being aware of is that over their last 12 months, their free cash flows are down a bit from where they've been historically. Costco has produced $3.5 billion of free cash flow over their last 12 months. So to get a current free cash flow to enterprise value for the business, when we divide their $3.5 billion of their last 12 months of free cash flow by their $226 billion total enterprise value, that only gives us a current free cash flow to enterprise value yield of approximately 1.5%. On a current basis, they're even a bit below where they have been averaged out historically. So Costco seemingly does not offer us the risk premium we were looking for here in comparing their cash flows to their enterprise value. And it would look like a lot of the qualities that make Costco a great business are being appreciated by the market at their current valuations. Be aware, however, that this metric is only one data point to be mindful of, and that you want to view Costco holistically as a business. Here we're looking at Costco's dividend profiles. Costco has increased their dividends per share in each of the past 5 years. They've also managed to grow their cash flows over this time, and in 2021, they issued a special dividend of $10 per share. Costco looks like it is able to conservatively pay out their dividends based off of the cash flows that they're bringing in, and they only paid out this special dividend after having a couple of big years where they brought in a lot more cash flow than they were paying out as dividends. Even though this is their historical performance that we're looking at here, and past performance is no guarantee of future performance, it would seem to be the case that Costco is likely a contender to be a dividend growth stock into the future, based off of this wide gap between their cash flows and their dividend payouts, and that seemingly one day it's not out of the question that Costco would both be a dividend aristocrat and potentially even a dividend king given enough time for this business. Then finally, here we're using a discounted cash flow model to come to a potential fair value for Costco. So starting with an average of their free cash flows and then projecting this out into the future based off of Costco's historical abilities to grow their free cash flows over the past 20 years or so. So we're using historical growth assumptions that you need to confirm or disconfirm for yourself whether or not these are potentially going to be applicable to give us a baseline estimated projection for Costco over the next 20 years. So assuming a growth stage over the next 10 years where Costco grows their average free cash flows at a rate of nearly 13% annually, and then assuming a terminal stage for the 10 years out after that, so projecting 20 years out into the future in total, where their growth slows down to a rate of only 7% annually. If we add in their tangible book value today, and we wanted a 10% rate of return going forward from Costco, then it looks like a potential fair value for the business would be right around $300 per share. So that is significantly down from where their current stock price is. Keep in mind, however, that these are based off of assumptions, and that you need to do your own homework to try to understand the business in more depth to really be able to say one way or the other if these are accurate going forward for Costco. Using these same historical growth assumptions, it looks like from today's valuations, you'd only be able to reasonably expect about a 4% rate of return going forward from Costco over the next 20 years. So Costco is really a wonderful business, and they have a lot of really high quality quantitative and qualitative aspects about their business. So there is the potential that this type of analysis is not giving Costco its fair due. Also, please be mindful that this analysis is not financial advice. It is not a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with the properly licensed and registered financial and legal professionals. So in summary, Costco checks the box on 5 out of 6 metrics. They're earning average returns on capital in the low 20% range. They've managed to grow their revenues, earnings, and free cash flows over the last 5 years, and they've pretty much kept their shares outstanding flat with only marginal dilution at best. So on a per share basis, these metrics are up as well. So coupling their per share metric growth with their high average returns on capital, that's potentially indicative of being a sign of a wonderful business, as management has been able to grow their intrinsic value on a per share basis over this time. Then Costco also is sitting on $100 million in cash left over after paying off all of their debts, and the business is highly cash flow generative, so it looks like their balance sheet is in pretty good shape here. On both a current and an average basis of comparing their cash flows to Costco's total enterprise value, it does look like the business is not offering us the risk premium that we would ideally be seeking here, and that some of these qualitative aspects about Costco's business would seemingly be priced into their current valuations. Costco's dividend profile also looks like it's in great shape, and Costco is conservatively paying out their dividends, not really surpassing more than 50% in any given year. So it looks like Costco, as they'd be able to continue growing their cash flows into the future, would likely also be able to keep raising their dividend, potentially making Costco a contender for being a dividend growth stock, and maybe even one day becoming a dividend aristocrat, let alone a dividend king. Then finally, performing a discounted cash flow analysis of Costco using historical growth assumptions for their abilities to grow their free cash flows over the past 20 years, which are inputs into that model that you need to do your own homework on to determine if those are going to be applicable going forward as a baseline projected estimate for Costco in the future. That from today's prices, you could reasonably expect about a 4% rate of return going forward on Costco if those growth assumptions held. And to earn a 10% rate of return going forward from Costco using those same historical growth assumptions, you'd have to wait for their share price to come down to about $300 per share, which the last time Costco was there was back in its COVID-19 pandemic lows in March of 2020. So these things are possible, especially with market dislocations. You just have to be patient if you would consider this a reasonable price for Costco. It's worth reiterating that this analysis is not financial advice. It's not a buy or sell recommendation of any security. Investing does entail the real risk of permanent loss of capital, and before considering any potential investment decision, please consult with the properly licensed and registered financial and legal professionals. This analysis instead serves as a beginning and holistic understanding to help you determine if it's worth your time and energy to dig in and learn more about Costco. If you're interested in learning more about Costco, I would highly recommend checking out almost everything that Charlie Munger has to say about the business. He gives a very good, succinct summary of the wonderful business that is Costco, and he's really belabored on that point at a number of different Berkshire Hathaway meetings and daily journal meetings. When you're finished learning firsthand from Charlie about why Costco gives him so much joy, I would also recommend reading the biography of Sol Price by his son Robert Price. That book is called Sol Price, Retail Revolutionary and Social Innovator. Sol Price was a mentor to James Sinegal, the founder of Costco, and James Sinegal worked at Sol Price's Price Club before he founded Costco. Price Club and Costco eventually ended up merging, and when asked about what he learned from Sol Price, Jim Sinegal readily credited Sol Price with teaching him everything that he knew and everything that he had to know in order to operate such a wonderful and strong, successful, enduring business. So extremely high praise there. Additionally, if you're interested in learning even more about the business, just like with any other business, I'd recommend diving into their filings, read through their 10Ks, read through their 10Qs, and read through some of their recent quarterly earnings call transcripts to get a just holistic sense of the business, so that as a value investor, you can conduct your research to understand the business as if you're going to own 100% of it, and truly understand the underlying essence of Costco. Through this deeper research, you'll understand both the qualitative and the quantitative aspects of Costco as a business. and be able to determine an appropriate intrinsic value for the company as you see fit. So with that said, that's it for today's fundamental stock analysis of Costco Wholesale Corporation, ticker symbol COST, COST. As mentioned, Costco was a subscriber request, and it's one of only a handful of businesses that Charlie Munger owns for his family accounts. Costco is also the only public company that Charlie Munger is on the board of besides Berkshire Hathaway, and as one of the most esteemed and admired value investors of all time, with one of the longest track records to boot, it's pretty likely that Charlie knows what he's doing. So if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Costco with me, and have a great day.